Hi, I'm David Hyatt, and welcome to Autofocus. New car sales in September were up dramatically, and we're going to be talking about that and other issues with Jonathan Banks, Executive Auto Analyst with NADA's Used Car Guide. Jonathan, welcome.
Thanks, David.
What's behind the numbers, and what kind of an impact do they have on the used car market?
Well, September annual sales rate hit above 13 million, which is a very dramatic improvement over the past few months, actually reaching a point that we hadn't seen since April. Behind it, we believe, our analysts have seen that demand has been really strong for both new and used vehicles. So both the new and used market improved dramatically from a sales standpoint. A lot of the sales improvements came on the truck side. Manufacturers have had very aggressive incentives on trucks and SUVs to clear out inventory, and we've seen demand continue to be strong on the new car side for small cars and mid-sized cars due to the relatively high fuel prices. What was surprising is a strength we saw in the used market, because what we expected is that consumers may be moving from used vehicles to new because of the strength in trade-in values, but what we saw actually was an improvement in both markets. So it was really a really good overall month.
That is a big surprise, and what accounts for that?
One thing is really pent-up demand, and a lot of that is driven by the fact that the age of the vehicle fleet out there is really quite old. It's about 10.7 years old, which is an old vehicle where consumers are starting to be concerned about repair costs. So they need to go back in the market and get either a new vehicle or a newer vehicle in the used market. So demand really drove it, and then, as I mentioned, the incentives are pretty strong on the trucks and SUVs, and we saw a bit of a comeback from buyers in the commercial space because they're probably thinking that they're seeing incentives that have maybe reached their peak for trucks and SUVs.
Where do you see the market for the remainder of the year?
Well, because we felt that the September sales were driven by demand, it should have actually a positive impact on used car prices. When you couple that with the fact that we believe that used supply will be tighter during the fourth quarter. Remember, back in late 2008, leasing basically ended, which means that the vehicles that we would expect to return after 3 years, because 3 years is an average consumer lease, those vehicles won't be returning to market in 2011. That supply coming back of 3-year-olds is essentially gone, which means that dealers are going to have a challenge trying to find nearly new used vehicles on their lots, which bodes well for pricing because there'll be a lot of competition for a limited supply of vehicles.
Let's talk about pricing a little bit more. I read an article this morning, for example, that says used car pricing actually has started to fall, and that is following on a record year of increasing used car prices. How do you see that playing out?
Well, what we have seen during the past couple months is prices on especially small cars and mid-sized cars have dropped from really what were record levels in late May, early June. So that fall off was expected. We expected prices to subside because they're coming off such a high peak. Remember, gas prices have stopped their rapid ascent that we saw during the beginning of the year, and they've been fairly flat, so consumers are acting a bit more rational when buying used small cars and mid-sized cars. So even though they're falling off dramatically, still when you look year over year, car prices are still up about 10%, and we expect by the end of the year that car prices still will be higher than last year's levels, but not at the levels we saw during May and June, where car prices on small cars were up to 25 to 30% above the year before levels.
Jonathan, thanks for this update. We'll look forward to following the market as it progresses.